China is taking aim at Canadian canola farmers. Beijing's new tariff on exports of raw canola from Canada at a rate of nearly 76% are now in place.
Canada turns crisis into triumph in canola trade. Dispute with China-Canada has pulled off a remarkable turnaround in the face of adversity, transforming a harsh 75.8% Chinese tariff on its canola exports into a significant victory. When Beijing first imposed the steep duty, widely seen as an attempt to choke off one of Canada's key agricultural exports, many feared disaster. It looked like the canola industry, a cornerstone of Canadian farming, could be crippled or even collapse. But what followed surprised everyone. Instead of backing down, Canada's canola industry responded swiftly and strategically. The sector pivoted toward new markets, ramped up efforts to boost the value of its products, and broke its dependency on China. What initially appeared to be a major blow turned into an unexpected catalyst for growth and renewal. The tariffs forced Canadian businesses to expand their horizons, actively seeking out buyers across Asia, Europe, and North America. These efforts quickly paid off, opening the door to more sustainable trade relationships and reducing reliance on a single, volatile market. Farmers and companies no longer depend solely on China. Instead, they're now building a broad and resilient network of international partners, setting the stage for long-term economic stability. What looked like a calculated strike from Beijing became a turning point that allowed Canada to assert its strength in the global agricultural landscape. In the early days of the tariff announcement, the impact was immediate and severe. Billions of dollars in trade disappeared overnight. Farmers who relied on Chinese sales were suddenly staring at devastating losses. Processing plants faced financial strain, and global canola prices tumbled. It felt like the entire industry was on the brink. The Canadian government recognized the urgency of the situation. Officials in Ottawa called for immediate support for canola producers, pointing out that the tariffs were timed for maximum disruption during a critical point in the agricultural season. But rather than sink into crisis, Canada chose to adapt, and fast. What seemed like a fatal blow turned into one of the most remarkable recoveries in recent international trade history. Canada restructured its canola strategy, using the crisis as a springboard for innovation, growth, and independence. In the end, China's move backfired, and Canada emerged stronger. The backstory reveals a broader geopolitical context. China had been a top customer of Canadian canola, accounting for nearly $5 billion in sales in 2024 alone. Then suddenly, that trade relationship came to a halt. The motivation behind the tariff was not just economic, it was political. The move came shortly after Canada, along with the US and European nations, imposed 100% tariffs on Chinese electric vehicles in response to Beijing's aggressive trade practices. China retaliated by targeting Canadian canola, a high-value export. On paper, it seemed like a strategic masterstroke. By hitting such a vital agricultural product, Beijing expected to pressure Ottawa into making concessions. But that strategy overlooked a key reality. Canadian agriculture is resilient. Farmers in Canada have long weathered trade disputes, from beef to wheat to pork bans, and they've developed the skills to adapt quickly to changing global dynamics. Over the years, the Canadian government has built a robust support system to help the agricultural sector survive international disruptions. In theory, the 75.8% tariff should have knocked the industry down. Instead, it sparked a new chapter of growth and diversification. What started as a serious threat became a powerful symbol of Canadian resilience. Rather than retreat, the country leaned into the challenge. The federal government acted fast, launching emergency support programs, including price stabilization initiatives, reserve funds, and direct financial assistance. These measures sent a clear message: Canada's canola industry would not be left behind. While government support was essential, what truly stood out was how quickly the private sector adapted. Farmers, exporters, and trade associations didn't wait for solutions. They went out and found new opportunities. As soon as the tariffs hit, the focus shifted to finding alternative markets, and those new markets responded enthusiastically. With global demand for canola climbing, thanks to trends in healthier cooking oils and the rise of renewable biofuels, countries like Japan, South Korea, the EU, and others in Southeast Asia stepped in. Within a single quarter, Canadian canola exports to these regions jumped by 20 to 30%. What seemed like a disaster at first became a golden opportunity to break free from over-reliance on one buyer. Even better, these new trade partnerships are proving to be more stable and sustainable. European buyers value Canadian canola for its high quality and non-GMO attributes. In Asia, the demand for clean energy and healthy food products makes Canadian canola a premium choice. This shift hasn't just stabilized the sector, it has redefined it. Canada has proven it can not only survive without China, but thrive. The collapse of one major trade relationship paved the way for a more diverse and resilient market presence. In the end, the very tariffs designed to damage Canada's agricultural industry have made it stronger, more dynamic, and more future-ready. Canadian canola isn't just about exporting seeds anymore. It's about innovation, value-added products, and building a smarter, more independent global trade strategy. What was intended as a punishment has instead become one of Canada's greatest trade success stories, a lesson in how strength, adaptability, and strategic thinking can turn crisis into opportunity. Canada's canola comeback. How a trade war sparked a national transformation. And here lies the heart of Canada's greatest victory. Market diversification was just the beginning. Canadian agriculture quickly realized that long-term sustainability depends on more than simply shipping out bulk raw seeds. For years, canola had often been exported as a low-margin commodity, vulnerable to market swings and international disputes. But China's sudden tariff shock became a wake-up call, pushing Canada to accelerate a shift toward advanced processing and high-value production. Today, Canadian canola isn't just being exported as seed. It's being refined into cooking oil, processed into plant-based proteins, and converted into bio-based compounds for use in clean energy. For leaders in the industry, this shift is a strategic breakthrough. As one executive put it, we're no longer just selling seeds, we're selling solutions for food and energy security. By upgrading the entire value chain, Canada has evolved from being just a crop exporter to becoming a strategic player across multiple global sectors. And the results were felt almost immediately. As demand for healthier food products surged, major global food companies turned to Canadian canola oil. At the same time, energy firms recognized the crop's growing importance in producing clean biofuels. What once seemed like an agricultural crisis has opened the door to trade opportunities worth billions. This is the true transformation. Canada has seized back the initiative. No longer stuck in the role of a raw goods supplier at the mercy of tariffs, the country now exports refined, specialized, and high-value products. And that changes everything. Any country considering applying pressure now has to think twice, because doing so means potentially cutting off a vital supply to key industries like food, health, and clean energy. Canada hasn't just moved out from under China's shadow, it has elevated its entire agricultural sector. What began as a scramble for survival has become the foundation for long-term global competitiveness. Canada has firmly positioned itself as a serious player on the world stage. And while Canada has been rising, China has started to face the consequences of its own policy. The outcome hasn't unfolded the way Beijing had hoped. What was intended as a display of strength, slapping a 75.8% tariff on Canadian canola, has instead boomeranged. With Canadian supply cut off, Chinese food processors and biofuel producers were forced to find costlier alternatives. Prices for cooking oil, animal feed, and even clean energy inputs began to rise sharply. Rather than weaken Canada, the tariffs raised domestic costs in China, right when its economy was already under pressure. Replacing Canadian canola proved far more difficult than expected. Few countries can match Canada in scale, quality, and reliability. Meanwhile, Canadian farmers turned the crisis into an opportunity. The fear of losing their biggest buyer was quickly replaced by a new reality: more markets, better prices, and higher margins. Diversifying exports meant less risk, and by investing in value-added processing, Canadian canola became significantly harder to replace. What was meant to be a pressure tactic ultimately strengthened Canada's position in global trade. Ironically, China proved the very point Canada has long made. Short-term protectionism may seem powerful, but over time, its weaknesses are revealed. As China struggles with rising costs and supply issues, Canada has demonstrated agility, innovation, and strategic vision, traits no tariff can block. Economists now view this trade standoff as a textbook case of miscalculation. Instead of forcing Canada to fold, China's actions pushed it to build a stronger, more resilient, and future-ready agricultural sector. And the bigger picture? This isn't just a story about canola. It's a story about the power of turning adversity into opportunity. China believed its 75.8% tariff would deal a crushing blow. But instead, Canada responded by expanding to new markets, moving up the value chain, and showcasing its ability to pivot with speed and purpose. What began as a short-term shock has become the foundation for lasting competitive advantage. The lesson is clear. In global trade, brute force doesn't decide winners. It's strategy, perseverance, and adaptability that truly define success. Canada didn't just survive this storm, it came out stronger. And in the end, it wasn't China that stunned the world. It was Canada that delivered the real shock.